This video is all about Mark Douglas. If you don't know who Mark Douglas is, by the end of this video, you're going to find out who he is. If it wasn't for his books and if it wasn't for me doing all the research about him and learning his thinking process when it comes to taking a trade and all of that, I wouldn't be where I am right now. Anyways, let's just jump straight into the video.
What are the steps? I mean, is there obviously by reading your books, by getting themselves immersed in your thinking, is certainly a way to do that. Is there anything from this point forward a trader can begin to do, or thoughts that traders can try to add to the repertoire to begin to think like a professional trader, have that carefree state of mind, and start to change the way that they view the markets and their risk? Is there an exercise they
Yeah,
can do?
yeah, absolutely. I mean, there's an exercise in trading in the zone, exercises in how to think like a professional trader, and basically all it really takes, Jared, is simply a sincere willingness to do it. Honest to God, it's just like anything else in our lives. When we realize that there's a particular goal that we have, and there's a strong desire to achieve that goal, then we're going to take whatever steps we need to achieve it. Whether those steps are trading in the zone or how to think like a professional trader or some other methodology that people are more comfortable with or whatever. The point is that if someone really sets their mind, any of us, when we really set our mind at getting something, we'll get there. We will get there. But the difference is,
That's one of those things I've always preached. Like, you can go and check back on all my videos, yeah? I've always said it doesn't matter what you want to do in life. Like, the first thing is the power of self-belief. As long as you can believe, as long as you believe you can be a trader, you can be a trader. Like, as long as like you put the work in and obviously you stay focused, disciplined and all of that, you can be a good trader. You just need to, first things first is self-belief in it. Like manifesting, all of that is cool, but without the power of self-belief, like you won't be able to do anything.
like we started out in the beginning of the program, the difference with this is that what we have to set our mind at is how to change our mind. Okay? And that's why there's so many people who are so close to getting it but never really get beyond that
What's
threshold.
that hurdle? Why can't?
Because people don't want to change the way they think. It's that simple. People don't like changing.
How can people get to the carefree state of mind that you talk about?
By changing the way that they think. They've got to eliminate the potential to think that the market's going to disappoint them. They've got to eliminate the potential to think that the market's going to disappoint them. And the way they eliminate the potential is by understanding that trading is not about being right or wrong. It's a probability game.
Right.
If you're trading technically. Now, I don't want to confuse people, but I got to say something else. Is that traders do
You got an hour
evolve.
and a half, by the way. Keep
We
going.
do? Oh, okay. Well, yeah. You got that long, honest to God?
Go ahead.
Oh, my. No, is that there are stages of development. In other words, and I think I started to talk about this in the last segment, is that there are stages of development. That we start out learning these fundamental skills, like learning how to think in probabilities so that the market doesn't have this potential to cause us to feel emotional pain.
Right. We did everything we could. We had our edge. It didn't work out.
That's
Move
right.
on.
And that's all it is. When you put on a trade and it doesn't work, all it really means is this, is that some other traders didn't come into the market that had the same belief that you had or the same conviction that you had about this market doing whatever it is that you thought it was going to do. That's all it is. It's nothing more than that.
And you have to learn to walk away.
And you have to learn to walk away. I mean, let's put it this way. How good do you think the average person is at...
That's why, yeah, like I don't trade patterns. I don't do all of these triangles and head and shoulders and all of that bull crap because it doesn't matter. Like no matter how good your setup looks, and end of the day, yeah, if you're in a long position, no matter how good the setup is, whether it's a falling wedge, whether it's a bull flag, yeah. Let's say you're in a long position. As long as the buyers don't step in, you're not making no money. The trade's gonna go the other way. So we see all of this like oh yeah, the pattern looks nice, but falling wedge, 68% chance it breaks to the upside. None of that shit matters, bro. That's why in trading, like what he's saying is correct. Like you need to just understand whether you need to adapt quickly in it. Like no matter how good a setup looks, you enter, and if it's not looking that good, if it's not looking like the buyers came in, or vice versa, if you're in a sell and if it's looking like yo, it's like it's going the other way, you need to be able to adapt. You need to cut your losses very quickly and move on. Otherwise, you're gonna get hurt.
At predicting other people's behavior, someone else's behavior. Not people aren't that good at predicting other people's behavior, or even their own behavior for that matter. Okay,
Exactly.
they find themselves doing things that what am I doing this for? You know, and so how good are they going to be at predicting collective human behavior? Now the methodologies that we have access to, these mathematical formulas, do that for us.
Right.
But you have to understand that there's no possible way that these mathematical formulas can predict the outcome of these patterns on a trade by trade basis, only on a series of trades. In other words, what they're really saying is that I have the odds. So when I get a signal, from my methodology, at the very fundamental, most fundamental level, what this is telling me,
Right.
is that
Fresh cross.
fresh cross. There's a higher there's a high, or let's say the odds are in my favor. The odds are in my favor that somebody is going to come into the market. This is what the pattern means.
Right.
The odds are in my favor that somebody is going to come into the market and bid it higher from here if I bought, or offer it lower from here if I sold. That's all it's saying. Now they're either going to come or they're not. And so as a result, I don't look at this as being a right or wrong. I look at this as how much distance am I going to give the market to move away from my entry point to tell me that they're either going to come or they're not, and any further is not worth the money of finding out. It's not worth the cost of finding out. That's all it means.
Do you talk about stop losses? You talk about stop loss.
And that's why, yeah, when it comes to doing a trade, your risk management is key. Because if you're trading with money you can't afford to lose, you're gonna get shaken out, and you're not gonna wait and see the true move of that price action. Like if you're risking money that you really can't afford to lose, and you start going down 5%, 10%, your brain is gonna play games with you. You're gonna be like, oh fuck, nah, let me just get out now. Let me bring my stop loss a bit higher, blah blah blah. And I learned the hard way, man. That's why right now, like, I don't risk more than 4%. And I'm not gonna lie to you, lot. Sometimes I do risk 20%, 30%, yeah. But I'm not naive, I'm not stupid. When I do risk that 20%, 30%, in my head, I've I've already said bye to that money. Like I've already just said, cool, I've lost this money. And I've entered a trade and I'll risk 30%, 20%. Do you get it? But I shouldn't. Like, I should just stick to that 4%, 3%, because you know when I'm risking 4%, 3%, like it's crazy. Like I'm not emotionally attached to this trade. I can let it run. Like and whenever I've risked 2 to 4%, I've always seen the maximum gains out of my trade, whether it's a short position or a long position. But after this video, I'm gonna show you like my X account, and I'm gonna show you all the trades that I took with the 2%, 4%, and I'm gonna show you like the trades that I took with the 15%, 20%, and you're gonna see the difference in the profits that I made.
And management in your DVD.
Yeah, absolutely, but not like
very
specific. Not the kind of specifics that like if you're in a half an hour time frame, how much.
Well,
how
that's
much
the trader's decision.
Yeah,
but the trader, dependent upon their trade style, is going to adjust their stops according to their account size, according to their risk tolerance, etc.
Right.
What you do, I think, is give people an understanding and a basis of where they should be placing their risk, or how much, not from a dollar perspective, but maybe from a
in other words, so that they can, yes, from a mental perspective, so that they can adjust their trading style in a way that conforms to where they're at in terms of their ability to take the risk.
Would one exercise be for a trader to begin testing out their loss? In other words, take a $100 loss, see how you feel. If you were able to take a $100 loss and walk away and not fret too much about it, not let it stress out the rest of your trading day and not think about it, maybe then you could say, okay, I'm willing to trade a more volatile stock and move to something like a $200 or a $300 loss, etc. Is that an exercise you think would be beneficial?
Oh, absolutely.
For the traders?
Yeah, absolutely. I mean, and that's what I suggest to people, all the time. Especially, when I was doing coaching. It's like, and when I was doing coaching on an active basis, I mean, I was coaching some pretty substantial money managers, and they'd get into a situation where they're on a pretty good losing streak, and often it required that they actually go back to a risk level that they hadn't Meaning that if they were trading, 10,000 or 100,000 shares, or willing to take, a $500,000 or $1 million hit on a trade, to get back to where they felt more in sync with the market, that they may have had to go back to only trading 1,000 shares. And see, and when you're working in a corporate situation like that, with other traders, that's often a hard thing to do, but that's exactly what they needed to do. I suggest to people that I mean, look at it this way. Paper trading. Okay, a lot of people who teach trading say that there's no point in someone paper trading, because there's oftentimes a huge difference between the results they'll experience paper trading and what they'll experience when their real money's on the line. Yeah, because there's no real money on the line. In other words, I'm sure there are probably a substantial number of viewers out there who can make consistent money following their methodology, paper trading, and then they start doing real trading, and everything changes. Okay, well, and so a lot of teachers have said, well, there's no point in paper trading because there's no correlation between the results. Well, that's not really true, because what paper trading can do for people is very beneficial. One, it's a graphic demonstration of the gap that exists in terms of mental skills that they need to acquire. In other words, it's a good way to get familiarize yourself with your trading platform. It's a good way to really get confident with your methodology, but more so, it is a graphic representation of the mental skills that you don't have.
That's an interesting concept.
Yeah. So in other words, how does someone convince themselves that they need those mental skills?
Look at your paper trading.
Yeah, look at your paper trading in relationship to your real trading. Now, if there's, and a lot of this, even if people have learned to think in probabilities, which is what we've been talking about pretty much this whole time, even if people learn to think in probabilities, it doesn't mean that they can really still accept the loss.
Right.
Because the way our minds think, in other words, if I have to take a loss on this trade, it could have the tendency to tap me into all the accumulative kind of negative pain of every time I've had to take a loss in my life. And it just doesn't mean in trading. It could mean, pets or what, people and that sort of thing, or jobs. And so, because our minds have this tendencies to associate, it can make it difficult to accept the loss. So a lot of times what people would have to do, and they also would find difficult to do, because a lot of times people get into trading because they want to impress their friends or their family, like, I'm a trader. Right. But what they might have to do is that when they graduate from paper trading, they might just, the amount of risk tolerance they have might only be just 10 shares, and risking $1 on those 10 shares. And you think, well, what's the point of that? Well, the point of that is that, when you can trade those 10 shares flawlessly based on whatever your methodology says, and do it without any fear or
because you were able to make those trades in the paper. I mean, you made those trades in the paper.
Then you can go to 20 shares and see how that feels. Then you go to 30 and gradually work your way up. And people aren't willing to gradually work their way up.
This is a concept that we've never even talked.
And you see right there, that's the issue right there, right? No one wants to put that work in. No one wants to turn a $50 account into a 50K account. Like, they don't want to do that. They just want to make 50K, 20K, 30K every other day. And it doesn't work like that. That's how you blow your account. That's how you end up getting depressed. That's how you end up like, just that's how you end up in a very bad place. And that's why risk management is key. I used to think, I'm gonna say, I used to think stupid. I used to think risk management is just what you're willing to lose. Like, fuck it, I'm willing to lose this, so I risk my stop loss would be 4K, or my stop loss would be 5K, 8K. But it's not that. Like, I've learned the hard way. Like, when I enter trades and I'm only risking, so let's say I'm risking 4K, 6K in a trade, yeah? Like, I trade like a bot. I have no feelings. I don't, every time the price goes up, it goes up. I don't get excited. When it goes down, I don't get excited. Like, I stick to my plan. My TP's over there, my stop loss is over here. I don't even need to look at the trade. I'll just turn my laptop off. I'll go and take my dogs for a walk. I'll go and chill with my kids. I don't care. That's because I'm trading with money that if I lose, it's not the end of the world, right? It's not the end of the world. I can lose that 50 more times. It's not the end of the world. But when I'm in those 20K trades, 30K trades, 40K trades, like, bro, I'm just being real with you. I'm stuck on the laptop. I'm watching every candlestick. If I'm trading in 15 minutes, I'm watching every 15-minute candlesticks. and I'm hoping for a higher low, I'm hoping for a higher high, and then when I see the first lower high, I'm thinking, oh, now should I exit? Like all of that is because I'm trading with money that I am emotionally attached with and I'm emotionally attached to. So it does not make any sense me being in that trade with that much money. And we're humans, right? Everyone learns the hard way. Me, I'm a bit slow in it, so it took me a long time. But when I did change the way I trade, I started getting the most craziest results. And this video isn't just gonna be like I'm showing you lot who Mark is, and then I'm gonna end it. No, I'm actually gonna show you lot my results and you're gonna see the gains that I made following this strategy. It's the best strategy ever. Like I don't have to be like stuck at a screen or anything like that. I can go and live life. I can go and do whatever I'm doing. And if my stop loss does get hit, who cares? Like I've, all I'm doing is saving my capital. And that's the most important thing when it comes to trading.
Talked about. I've never actually heard it put this way, Mark. I have to be honest with you, where you look at your paper trading account as kind of almost your goal, if you will, almost like this is where I could be if I was trading
yes.
from a carefree state of mind.
Absolutely. It's perfect. This is where I could be if I had that carefree state of mind. If I had the mental skills that allowed me to do exactly what I need to do without reservation, without hesitation, without fear. That's the way that we can, and that's, and that's basically what we're getting at. How do we use the methodology that we have and the capability and the potential of that methodology to its maximum? You need the mental skills to do it.
You made reference before both at Wise Fest and earlier we talked about some events of pain, pain in your life, and a lot of our traders right now feeling some pain with what's been happening in the markets the past couple of weeks. Mark, is there does a person have to experience this, a total drawdown in their account, a total loss in their account where their account's almost wiped out or is totally wiped out for them to make that change in their mind? I mean, does that have to happen? Does it have to be traumatic like that for them to realize, oh, I've got to change something? And I'm saying this, and obviously it can be done without that, but have you found that predominantly out there, in the people you've taught over the years, have people had to experience a high level of trauma before they can actually make the change? Or can someone just in the normal course of every day with a little bit of dedication actually? And I'm not trying to be rhetorical here. I really want a serious answer because there's people out there right now that I'm sure are thinking the same thing. Do I have to lose my whole account? Does this have to happen for me to make a
You
true
aren't in
change?
pain right now, are you, Jared?
What's that? Yeah. I'm good. I've been out of the market all
I'm
week.
just kidding. Yeah, well, you mean like the gutter principle?
Yeah.
Is that what you're referring
Well,
to?
explain
Like
the gutter principle.
The gutter principle. In other words, how much in the gutter do you have to be before you're willing to say, "I'll do anything"?
Mm-hmm.
As a matter of fact, this kind of brings something up. Is that when I was actively coaching, my
Listen, it doesn't matter what he's gonna say, yeah? I'm telling you lot this for me. Me personally, I was one of those guys. Like I was in the gutter. I had to go through the most craziest shit. I had to blow my accounts. I had to lose money, repeat, rinse, repeat, rinse, repeat. Even though I'm writing down my mistakes, I'll just when I top up my account with another 10K, boom, I blow that and I'll be like, bro, because I'm trying to get rich quick. And when I'm putting 10K in, I'm not trading with $100, $200. I'm trading with 4K, 6K. So, like it wasn't making sense. And I had to I had to feel the pain. Like I remember chatting to my girl, like, yo, listen, I'm not gonna lie. This was a couple of years ago. I said I'm gonna quit trading because it's not making sense. I'm just losing, losing. It's not making no sense at all. And then she was chatting to me and she was like, why are you losing though? But when you say it out loud, it is stupidness because you know why you're losing and you're not making the change. So clearly, it's not trading, it's not my strategy, it's none of that. It's just me and my risk management. And I was I was risking too much and I couldn't handle all that risk. And I was clouding my judgment. Like I'll be in a good setup. And if I stayed, let's say like certain trades, if I stayed in the trade, I would have 4x, 5x my money. But because I was trading with so much money that I couldn't afford to lose, I won't even see a 1x. Like 30%, 40%, I'll be out. And then at 4 hours later, when I look at the trade, I'll be like, fuck, I should have stayed in. I'll be like, look, I would have tripled my money. And then they'll start messing with my brain. and I'll start looking for other coins, and I'll start forcing setups. I'll be like, yeah, this looks like a nice short, blah blah blah, and then boom, you know how it goes. But yeah, man, risk management's key, and it sounds boring, it sounds annoying, but I'm just telling you a lot, man. Like, if you ain't sorted out your risk management, there's no point in trading. And when it comes to demo as well, I do agree with Mark. Like, you should do demo. Like, if you don't know how to trade, learn how to trade with demo. It shows you how to engage with the exchange. It shows you how to do your stop loss, all of that. And you can prepare yourself like for the real world trading demo on it. And then once you've got the understanding, boom, you jump in real life in it.
Coaching clientele basically fell into frustrated because of the potential that it's so obvious what the potential is, and yet there seems to be these invisible barriers that keep them from getting into that potential, that they come to me saying, I'll do anything. And that's, now everyone has different tolerances of pain before they get to the point where they say, I'll do anything, and mean it, and be sincere,
And mean it. Well,
and mean it.
the
That's
key.
the whole thing. They got to mean it.
Anyways, I'm not gonna bore you lot and play the whole interview. Like, you lot can go and check it out for yourself. Like, he's the real deal, man. And if you haven't read none of his books, like, I strongly advise you to read his books and take it in, because it will change your mentality when it comes to trading. His whole philosophy is more about your thinking process when it comes to trading, and how your brain acts when it comes to taking a trade. And that's the most important thing, because all of us can trade, right? We understand how to identify the trend. We know what uptrend is, downtrend is. We know when the buyers come in. We understand where key levels are. We understand the pivots. We understand all of this stuff, right? What makes a good trader? What makes a good trader is his mentality, and how much emotions is he feeling when he's in a trade. And you're not supposed to have no emotions. And the only way you have zero emotions is when you trade with money that you can honestly afford to lose. If you got 100K in your account, you have no business having a 20K margin trade. That does not make no sense. You feel me? Like, it's just 4%. Some people say 2%, 1%, but I'm just saying, you know me, I'm a bit of a, do you get me? I risk it for the biscuit, so my thing is 4% in it. 4% of your account. It should be nothing more than that. But I'm gonna quickly show you lot who Mark Douglas is, and we'll wrap this one up. For those that don't know who Mark Douglas is, see him right here. These are the two books that I've read, Trading in the Zone and The Disciplined Trader. But yeah, man, like I said, I'm gonna show you lot. This wasn't just about Mark Douglas or whatever. I'm gonna show you lot how I trade. Let's quickly go on my X account, yeah? So look, I'm gonna give you like some examples quick here. See this trade? This isn't a 4%. I'm just being honest with you lot. This isn't a 4% trade, yeah? As you can see, my margin is 20,000, and my take profit was up here at 18%, and I was already up. I was already up $2,000. This isn't a this is space of like 9 minutes, yeah? What I did was this red line right here, I adjusted my my stop loss. So basically, I entered here, right? I entered at 66,845. That was my entry, yeah? And the price went up. When the price went up all the way up to here, it was at 2,000, yeah? So what I did was I adjusted my stop loss to over here. So if the price comes back down to this red line, I've exited the trade, and I've made about like $1,700, $1,600, yeah? But in reality, before I opened the trade, my take profit was up here, as you can see, 18%. That's what I was trying to get, yeah? But because I was trading with a lot of money, when the price started going down, I quickly adjusted my stop loss to up here. Really and truly, I should have just done my stop loss to up here, I break even, and let it ride, right? And I would have made a nice bit of money. I would have made about 7K, just under 8K in the space of half an hour. But because I was trading with a lot of money, my like emotions kicked in, and I said, yo, 1,700 is a lot of money in 9 minutes. So I adjusted my stop loss to up here. What happened? Price came down. It gave me my $1,700, and then it flew up all the way to my take profit. So even though I made profit and that was a winning trade for me, I was still pissed because I could have made a lot much more if I just adjusted my margin. My margin was too high, as you can see. Another trade. This one over here, I kind of liked my margin. Like it was 8K. I let this one run. As you can see, look, this is my entry right here, 29.395. Nice entry. Like I waited for it. This was the point. Long story short, this coin was dumping. Like only a crazy person will enter a long, but I was in a long because like at some point we're gonna get some sort of bounce, right? But anyways, long story short, entered the long, 8,000 margin, 1,200, and it just kept on going up. Like I was comfortable with this trade. I didn't even have to sit here and look at this. I went out, I went and done whatever I done. My full TP got hit, 40% move. I was happy. I made 4,150 something from this trade. Happy days. But you see the difference. Look at my margin, less money, 8,000. The one before that was 20,000. You see what I'm saying? I had no emotions to I wasn't emotionally attached to this trade. I didn't even have to look at it. I put my take profit and I just left. Next trade. This is another one. 15,000 pound margin, yeah? Had my take profit up here at 50%. So 7.5K would be my take profit. And tell you the truth, this did hit my take profit. I did make my 7.5K, but I shouldn't have took profit there because it kept on going up. If I just chilled out and just let it kept on run, I would have been nice. I would have been super nice. I would have made it, I think it would have been 100%. So I would have made 14K. But instead, I left out on 7.5K. Like this, I'm just showing you not to like. I'm not here to lie to you lot because I'm not selling no course. I'm not doing none of that. I'm just trying to teach people how to trade for free, and that's why I'm just being honest with you guys. Yeah. But anyway, that's another example. Here's another one. This one is a video. I don't think you lot can see it proper. Hopefully, I can pose it. Let me see if I can pose it. All right, cool. I posed it. As you can see, look, margins 21,300. So that's my own money, $21,000. Yeah. And let's keep going. Had my take profit over there. I was only aiming for 4,600. And again, I did get that 4,600. I made that, but the issue was if I stayed in, I would have made a lot much more. All right, cool. Here's another one. I love trades like this. Let me look at that. Margin 2,400. I don't, you see trades like this. I put trades like this on and I just leave. I don't even care. I shut the laptop. I go and chill with my kids, or I go and take my dog for a walk. I won't care. As you can see, I'm only trading with $2,400. So it's happy. Like if I lost that, I don't care. Do you see what I'm saying? Like obviously I won't be happy, but it won't bother me. It won't put me off trading. Like it won't make me have a bad day. It's just one of those things, isn't it? But yeah, I'm just showing you how important it is to trade with less, basically. Uh, it's another one, another 2,400. Happy days. Boom. Another one, 1,400. I caught 50% move. That's $800. Happy days. All of this is like in a very short space of time. Do you know what I'm saying? Look, 800 on the first trade of the day. Like, and the market was shit. As you can see, I can see, look, this market price action is dog shit. I'm grateful for the win. Like, as you can see, small margin, still winning. Happy days. You don't see my margin on this one. Don't see my margin on this one. Over here, 5K in 3 minutes. That must have been a crazy margin as well because if I stayed in this was the fart coin one, I would have made a lot much more. But my margin was so high. For me to make 5K in 3 minutes, I must have had like 30K margin or something. What's these two? Position size, $82,000. Up 700. So that means I'm probably using high leverage, probably like a 20x, 30x leverage. Another one. I don't show my margin here for whatever reason. But anyways, I hope you all get the point in it. The point is just Just stick to that 4%, 2% of your margin. So what's the lesson of today? Don't trade with more than 4% of your capital. It's simple. When you're in a trade, you need to be in the right state of mind. Like, you don't want any fear kicking in. You don't want to be emotionally attached to the trade. Just keep it nice and simple. 4% of your capital. And if 4% is too much, 2%. And you lot let me know how you lot trade. Do you trade with 4% of your capital, 20% of your capital, 1%, all your capitals? Hit me up in the comments and let me know. You lot know what to do. Like, subscribe, all of that. I'll hit you up with some more.